Time for today's three-stock lunch. We are looking at three big movers on earnings. And here with our trades, Victoria Green, G Squared Private Wealth CIO and a CNBC contributor. Victoria, welcome. Let's start with Clorox. Shares are up on a second quarter beat. How do you feel about this company?
Look, there's no hate on Clorox. They did phenomenal, strong beat. My problem is the premium you're paying for this stock right now. They're trading about 40 times multiple versus like a Unilever at 14, 15 times, Kimberly-Clark around 20 times, and even Procter & Gamble at 26 times. So it's just you're paying so much money for this stock. They also have a history. The last two earnings, they've had a really nice pop on their earnings announcement, and then they've given it right back. They did that in February. They did that in May. And so it's just something I'm just not believing this, and I'm a seller of this rip, mostly because of the price it's trading at, and the multiple is such a premium over its peers.
Why is it getting that multiple versus its peers? What is it? Is it growth rate, or what are people looking for here?
I mean, the lifestyle sector has done well. It finally grew 15%, but a lot of it, I think, is a little bit of a holdover from the pandemic day. They have such strong name brands that people still love their Clorox, and they're a strong consumer staples stock. It's just hard times to be owning a high multiple staples in this cycle.
Yeah, it's 30 times. I mean, that's like the same as Microsoft at this point. How about PayPal, Victoria? Big losses today, down as much as 11%, a little more than that right now, even though results were in line. What would you do with the stock?
This one I'm still selling, and it's for twofold. They couldn't even hit, but even after cutting 7% of their workforce, they couldn't hit that margin estimate of 22%. They missed on that. Their margins continue to shrink. They're struggling with their loan portfolio. They were trying to emulate Amex with those small business loans, and they're having to write some off. And mostly, they also don't have a CEO. They're still searching for their CEO. So the direction of this company may change, and they're facing a lot of threats. I think over the next 5 to 10 years, fintech is going to change dramatically. If you look at what Apple's bringing to the market, Google, and then even with the blockchain and the Bitcoin type community may bring, and how payments may shift, I just see there's a lot of threats for this stock, and just going to be difficult for it to continue to grow profitability and grow margins.
What are the other brands that PayPal owns?
Venmo. Venmo's their other big one.
Yeah, Venmo's the main one. All right, let's move on to Etsy. Shares are down there despite a headline beat on revenue and profits. So what do you think about Etsy?
Etsy here's a buy. I think investors got disappointed by their lack of updated guidance, but it actually was a fairly strong beat. And if you dig into the numbers, they looked at their gross merchandise sales, and they grew in May, they grew in June, and they gave guidance that they continue to grow in July. This platform has been investing a lot in improving their search, bringing in AI to help drive customers, and they are seeing new customer growth. There were some really great green shoots in the customer growth side. So I think the stock for me is a buy. They've got great supports between 80, 82, and they've invested in their platform and continue to grow and bring on new customers. So look past the fact that they had no update to their guidance. It may be conservative, giving them some room to beat in the second half.
All right, we go out on an up note there. Victoria Green, thank you very much.